Well, hello, everyone. Welcome to our Silicon Global Ask a VC series. We started this in 2020 and we've been going strong since then. So I hope that you'll check out all of our episodes on the YouTube channel, Silicon Global Online. They're all there, 62 of these, plus some videos that I did prior to starting the Ask a VC series. So it's been quite a journey and quite a lot of fun. And today we have Ron Levin, who's joining us from Boston. And Ron is the managing partner of Alumni Ventures, and he also runs the seed fund, AV Seed Fund. So welcome, Ron, to the show.
Thank you so much. I appreciate you having me, Rebecca.
Okay, well, we're going to dive into the topic a little bit after my intro here about Silicon Dragon Ventures, which I started in 2010. And now today we do a lot of content around books and this online series, our newsletter, videos, events, circle membership, all of that's pretty active. Plus 4 books, Silicon Dragons, Startup Asia, Tech Titans of China, Silicon Heartland. I wrote all of those since 2008. 2008. Okay, but somebody who's probably been a lot busier than me is Ron Levin, managing partner of Alumni Ventures in Boston. So Ron, $1.2 billion in capital under management from individual investors, 1,300 venture-backed companies. Ron has a very interesting background. Co-founder, CEO of Travel Perk. He also started the B2B division of Booking.com. McKinsey consultant, and he began his career at search engine and web portal Lycos. He has his MBA from Harvard Business School. He is the author of Higher Purpose Venture Capital, which launched last year, so it's a new book. So once we get into our Q&A, I'm going to be asking you for your questions, and you can turn on your camera at that point and ask a question of Ron, or you could comment on anything that we're saying. So let's get started. I'm going to stop the share and go to the video view. All right. So Ron, are the flowers out yet in Boston?
I think they're about to start coming out. I was just reading to my daughter last night, Make Way for Ducklings, which some of you may know is set in the Boston Public Garden. And we always look forward to coming out in the spring when the tulips are out and we can ride the swan boats. And it's a lot of fun with the little ones.
Oh, that does sound nice. I like the title of that book. And the title of your new book too. Do you have a copy of it that you could show us?
I do. It might be a little bit obscured by the.
Oh, it's too close. Go back a little
No,
bit.
it's the background.
I
Yeah,
see.
but
There we
anyway,
got it.
there it is.
Higher
You can
purpose
sort of
venture
see
capital.
it there. Yeah, higher
Yeah,
purpose venture capital. Yeah.
okay. There's a ladder. It looks like there's a ladder and a window on the cover.
Yeah, it's kind of I don't know what it is, some kind of a block, but yeah, it's a ladder into higher purpose, I suppose, is the metaphor there.
Okay, that's nice. That's very nice. So was that your first book or not?
It is, yeah. It's a first book of my end. It was kind of a something I'd always wanted to do. My mother had published 4 books in her lifetime, and
Oh,
always sort of thought I'd like to do a book. But the funny thing about it is I actually started writing it before I realized I was writing a book.
oh,
Because it really, in a way, is a much of it is a compilation of blogs that I had written over quite some period. And I'm fully honest when I tell you that it was more than a year before the thought even crossed my mind that I should turn it into a book. But I'm glad I did, because it gives me a platform to talk about a topic that I'm passionate about, which is impact venture investing.
right. Well, can you give us some examples of that impact venture investing from your own career?
Of course. Well, I'll start with the basic notion in the book. I profile 50 venture-backed companies that are all solving problems related to solving both the symptoms and causes of social and wealth inequality. One of the biggest fundamental challenges that societies face across the world and have since time immemorial. And I decided when I first started the blog to write about companies that I had already invested in personally through Alumni Ventures that are solving problems. The common theme is solving inequality gaps, yet the companies are in very different sectors. I cover financial technology with access to capital and credit and democratizing that for people who do not have easy access, to health and wellness, to education, to mobility, to disability technology, and many other aspects as well. So I break it kind of down into chapters, but I've had the good fortune as an investor to participate in the growth of many really dynamic companies that are seeking both ROI for profit and scalability, as well as solving an important social problem.
Okay. One of the things I was really interested in is how the model of Alumni Ventures works. Can you describe that for everyone? Because I think it's rather unique.
Sure. So we've actually been named the most active VC investor overall in the US the last couple of years by PitchBook, which sort of keeps the rankings on these things. But we market ourselves as the largest venture capital firm for individual investors. So traditionally, nearly all venture capital firms raise their money from institutional LPs or limited partners, which are generally consisting of endowments, pension funds, family offices of extraordinarily high net worth families. We took a different approach by trying to make the asset class available to any individual accredited investor. So you do need to be accredited to get access to alternative investments such as venture capital, which is like $200,000 in income consecutively for a few years, or $1 million in liquid assets. Those are sort of the rough criteria of how the SEC defines that. But that opens up the venture capital asset class to millions of more investors. And so the investing in VC was never really accessible. And so that's what we tried to do when we got started about 8 years ago, to create venture funds for individuals where you could get in without having to write a 10 or a $50 million check, but you could come in with a 50,000. In fact, now we have funds that have a minimum of only $25,000. So our whole purpose was to create small funds that are well diversified across sector, stage, and geography, always co-investing or nearly always co-investing alongside leading venture capital firms. So it's not just us in a vacuum picking out winners from losers. We're investing alongside leading venture firms because we aim to generate returns that are in line with other leading venture firms. And kind of the point of investing in venture capital is, as with many alternative asset classes, it does historically lead to returns that are outsized relative to, for example, public market investing. But there are trade-offs to that, such as you don't have instant, immediate liquidity once you've made an investment. It can take years and years, and there's always risk that any individual company or portfolio could fail and not return. So there are risks. I mean, there's no free lunch, as they say in economics, but that's our model. So we are very active co-investors across a wide ranges of sector, stages, and geographies. We have many funds under one umbrella. Some of those funds are marketed to various university alumni communities across the country. And some of the funds are more geared towards specific thesis, a mandate around a sector or a stage, such as an AI fund, a deep tech fund. We have a global fund, a growth fund, and I'm personally involved with 2 funds, our seed fund that I lead here, which only invests at the pre-seed and seed stage, as well as a new health tech fund that we call the Doctors Innovate Fund that we're just getting going now. So that's a little bit on my role here.
Yeah. How many of these funds are there?
Yeah, well, we actually raise in annual vintages, so that's a little bit different from other funds, which might raise every 3 or 5 years or so. And so our funds tend to be fairly small, and so it's relatively small checks into 20 or 25 companies in most funds. Although my seed fund is actually more active than that. We're doing about 50 to 60 investments this year, as I said, that's going to be a well-diversified portfolio because we're trying to represent, create some kind of index of what's happening among leading venture firms generally. So we have many funds at any one time.
I see.
in the course of a year, there's probably several dozen of them that we offer.
Oh, and it's cross country?
Yes, we invest across country. I've invested recently in Alabama. I've invested in, Colorado, and certainly the coasts get plenty of presence. And we invest internationally as well. I've invested in Latin America, in Europe, in the Middle East, in Asia, and Africa. So we're predominantly in the US, but we will certainly consider a strong opportunity overseas as well.
And you work with the other alumni ventures, say in Austin or somewhere else? You work with them, you co-invest with the other alumni venture funds?
That's right. So we're one group. Think about us like a Fidelity for venture capital. So we're like a fund family with
Okay.
different independent, unique funds, but all in the same organization. So my colleagues who are involved in our Texas office, in our New York, Chicago, West Coast offices, we're all colleagues and teammates,
Uh-huh.
but we're all kind of divided into being dedicated toward investing for different funds. So any fund you pick will be different from the next one.
Okay. Why did you do the seed fund? How did the seed fund come to you?
Yeah, that's a great question. So I've been at Alumni. I'll be here 5 years, but I've known the firm since early days. I was actually personally an investor in our funds before I came to work here, and had the opportunity to get to know the team, which led to the opportunity to become a venture capitalist. And so I've had a great journey here. I had the opportunity to invest as part of the Yard Ventures Fund, our fund that's marketed toward the Harvard alumni community. And invest in many founders from the Harvard community, although that's not a requirement to be an alum to receive investment from the fund. And we sort of had some transition here. We move quickly and sometimes change things around internally, give different people different opportunities. And as I sort of grew from a sort of entry-level venture capitalist, having been an entrepreneur before that, I kind of got my feet wet, grew in the organization a little bit, and then as I was named managing partner last year, was offered the opportunity to lead our seed fund, which I really like because I love talking to entrepreneurs. I love talking about not just, how their performance has been going, but about their dreams and their vision and their plans, and helping them think through what makes sense and what connections I can make. I've always kind of been a connector and a networker. I think that's kind of our expertise here at Alumni Ventures. We try to leverage this huge community and network that we've developed of over 650,000 people who are opted into our network, and make connections to partners, experts, talent, whatever it might be. And so I feel like we can be particularly helpful with early seed stage companies. So for me, that kind of fit like a glove, and I was excited to jump in at the opportunity to work on kind of the pre-seed and seed stage, where things are still maybe not still on a napkin, but are still very much being formulated, and the foundations are being built for creating a large company.
Okay. And you, I presume, mentor those young entrepreneurs or early stage entrepreneurs more than the other venture capitalists that are in the Alumni Ventures Network, because you're really very early stage. And yeah, I'm curious about how you select these founders. Do they come to you? I mean, or do you reach out to them? How does it work?
Yeah, it's really a combination of everything. We do get a lot of cold inbound. I tend to prefer warm inbound, not to discriminate against someone that doesn't know me personally, but the volume of deal flow that we see is, I mean, it's many per day that just come into my inbox, let alone all of my colleagues. And one easy filter is if someone that I know sends me something or makes an introduction and says, "Hey, this is something I think you ought to look at," that's already kind of a first level of the funnel that can be helpful. In fact, we've even formalized that a bit internally. We've developed something that we call a super angel partner program, where we
Oh,
work with active, experienced, expert angel investors who share deals that they themselves are investing in. And that's been a tremendous funnel for us over a little over a year since we started that, to have well-vetted opportunities come in the door, and we've had access to opportunities we might not have otherwise seen. But aside from that, we sometimes do outreach. Companies hit our radar for one reason or another, or we're looking to invest in a particular sector, or we have connections to something and that we hear about. So it's really everything under the sun that you can think of.
so how does the alumni part of it work?
Yeah, so this is really in our foundation. The idea was, how do we build venture capital funds for individuals? And so the thinking of our founders, led by our CEO, Mike Collins, was, what will bring people together? Alumni affinities was the thesis, that this is really strong. People like to invest alongside of their fellow alumni and invest in founders that come from their school. And so he started with the first fund, which was a Dartmouth alumni fund. Dartmouth has a very strong sort of loyalty and brand with that community. And the first sort of test fund was successful enough that it was decided that we should try more of these. And a couple more funds launched, and more and more and more after that. And so with the alumni funds, they're not officially part of the school, but we like to be part of the ecosystem by investing in founders who came from that school. Although, as I said, that's not a strict requirement. And we try to bring together alumni of schools investing into the different communities. So we have independently branded funds. So it's, as I mentioned, Yard for Harvard, and we have Castor Ventures for MIT, and we have Spike Ventures for Stanford, and Congress Avenue for Texas, and so it's generally larger schools, Ivy League, some state universities, but generally bigger schools that kind of have a critical mass of alumni as well as alumni entrepreneurs, is sort of how we got to the schools that we did.
Oh, that's really interesting. And on the investor side, how does that work? I can understand from you're investing in these startups that are somehow affiliated with the alumni network. What about on the investor side? Do you have to be, out of Harvard or Princeton or wherever, UT Austin, in order to be an investor in these funds?
You're welcome. Anyone is welcome to invest in any of our funds. We're not meant to, exclude anyone. In fact, we do have folks who do that. I personally had invested in, before I came to work here, I'd invested in our MIT fund because, well, my wife and my husband, my father, both were alumni of graduate school at MIT.
Okay.
And so I felt an affinity. Other people, I know one person who just thinks that UC Berkeley turns out really tremendous
Uh-huh.
technology and engineering and biotech, and they just
Yeah.
want to be part of that community. So it's really kind of up to you. You don't have to be part of those schools. And as I said, we have other funds that do not market themselves to alumni communities, such as my seed fund. So that's, not even really part of the equation either, in that regard.
Do you compare results with the other funds?
Sort of. Looking at result, this is a tough business. I often say that I don't really know how good of a job I'm doing, and I probably won't know for about 5 to 10 years, because it really takes that long to see returns. You can start to see sort of gradually over time how things are emerging as companies raise subsequent rounds, hopefully at higher valuations, and other companies may fail. And you can start to see who some of the winners are, kind of before there's actually an exit. But you never know. I mean, we've seen companies that raised one round and there was never any change in their price. And then all of a sudden, 3 years later, they get sold at 10 times the last valuation. But if you were to look in our investor portal, you would have not known that the company had grown 10 times in valuation. So it's a very difficult business to kind of gauge. And that's part of the risk and the uncertainty of investing in the asset class. With the upside comes, some sort of consequences like not really knowing how your portfolio is
Right,
doing day to day.
right, right. So what's your best deal?
Oh boy, that's a good question. Well, I can tell you about one that I'm very proud of, that I mentioned in the book. It's an education technology company called All Here, founded by a woman who's a former Boston public school teacher, who really wanted to address the problem of student absenteeism, and she attended Harvard Extension School, joined the Harvard iLab, which helps incubate companies from founders who went to any Harvard school, and created an AI chat to help schools communicate with students, families, parents. So, for example, if a school were to notice that a student was absent one day, they could have an AI chatbot kind of reach out by text to the parent, say, "Hey, I noticed your child's not in school today. Is there any reason? Can we help?" And if the answer is something like, "Well, unfortunately, my car broke down. I wasn't able to give my child a ride," then they can say, "Oh, well, we might be able to help you with that. We have somebody who could maybe help go pick up your child. Would that be of help?" And this company has scaled tremendously. It's I mean, I consider it like among top of any of the SaaS companies that I've invested in, because there's so much demand for this, and they're building more and more features that are really helping schools out, particularly some of those inner city public schools. That I kind of measure my return in different ways, and both, ideally, I like to see both impact as well as returns, and this is one company where I think we're going to see a nice return in both respects.
Oh, that sounds like a great model. What's the name of the company again?
It's called All Here.
All Here. Nice name too. So what about on the other side, the flip side? Any of your deals ever failed?
Well, I'd be lying if I said every one I pick is a winner. We're not magicians or soothsayers. We're doing the best we can based on a
Sure.
certain amount of repetitions at this, and
Yeah.
learning from our experiences. So yes, I've had failed companies. I've had some personally as well. I started angel investing before I became a VC, and I had a couple of companies that failed like almost in the first year. But in a way, those are the companies you learn the most from, because you kind of can go back and diagnose what went wrong. Why did I make the decision to invest? What have I learned from that? And how will that inform me going forward? So I don't think investors should be ashamed of missing deals. And in fact, Bessemer, one of the leading VC firms, puts out something that they call their unportfolio, or something like that, where they talk about all the companies that pitched to them became a huge success, but they did not invest in. And so it's a little bit of humble pie. And I think investors need to stay humble, because we're always learning. There's no one who does this perfectly. The best of the best don't get everyone right, but the best we can do is keep learning from that, and hopefully that informs us going forward on what companies we both invest in, and how we support the companies that we do invest in.
Yeah, absolutely. So it's interesting your background too. A lot of travel in your background. Booking.com and Travel Perk is pretty interesting. So I was thinking you probably invest in some travel companies too.
Yeah, well, in a way that also, because I do come from travel tech more than probably any other sector, I think sometimes I'm almost a little more skeptical, because I have a little more sense of what can go wrong. But that being said, yeah, I do invest in some travel tech. It's really my background. I've had sort of two competing interests professionally throughout my journey. Since undergrad, I started out kind of in the early .com Lycos
Hmm.
days in the in-house
Yeah.
M&A group. And then I pivoted and went to work for an airline. Back at America West Airlines, I was a route planner for a few years
Oh,
uh,
really?
before business school. And like, well, how do those things come together? Well, eventually they do. I sort of came out of business school, went into consulting, but then coming out of a few years in consulting, I really had, still have this passion for travel, because I love traveling personally, and have since I was a kid, and loved aviation and all of that. But I also really like the dynamic of working in a startup, because people are very forward thinking, always considering
Yeah.
innovation and what's next. And
Yeah.
marrying the two became a natural fit for me. So I wanted to get into travel technology. And that's what led me to Booking.com. I was living in Amsterdam at the time, and Booking is headquartered there. And Booking is
Uh-huh.
arguably the most successful travel company that's ever been created. So I had the opportunity to go work there, and that really fueled a lot of my energy, and is kind of what led me to go and co-found Travel Perk, along with two of the people that I met at Booking, actually.
Okay. Well, very good. I think we're going to open things up to our Q&A session. So I'm going to open it up to gallery so everybody can see one another. And if you have a question, then you could turn your camera on and ask it. And I think uh, Nathaniel, you have a question, right? Nathaniel, you want to turn your camera on and ask a question? Hi, Nathaniel, how are you?
Hey Rebecca, how are you? Hey Ron, happy what is today? Today's Wednesday. Happy or Thursday, excuse me. Happy Thursday, guys. I appreciate you for putting this on, Rebecca, and I appreciate you, Ron, for doing this Q&A. I've been really interested in Alumni Ventures for a while now. My question's more so on space tech. I know that Alumni Ventures is pretty active in that space, and we'll love to get your thoughts on it as well, specifically in the pre-seed, seed stage, as well as maybe on the healthcare side as well. So, healthcare or life sciences space. So, we'd love to get your thoughts.
Sure. Yeah. Thank you. And appreciate you following along what we're doing here at AV. Yeah, we're We're very broad. So we have 1,300 portfolio companies. So I don't necessarily know a lot about all of them, but you're right. We have taken a bet in a number of space tech companies, some that appear to be going well, and I've seen some others that may not be going so well. I mean, I like to say that we like to invest in moonshots, and space tech is literal moonshots in many ways. And it's actually a really good question on how to think about it from a kind of the pre-seed and seed stage, because most of these companies, this is deep tech, right? These companies will require significant amounts of capital if they're going to scale up for the most part, and depends on what they're doing. And, you know, who knows, maybe there's some software play that's a little bit different, but a lot of them involve hardware, and a lot of them involve actually getting into space, and there's huge barriers to entry and a lot of R&D, and it's tough. And it's actually interesting. I mean, I actually have one that I'm looking at now that's actually fits that, where if things go well, they could go really, really well, and this could be almost a monopoly and multi-billion-dollar market. But what it takes to get there, and a lot of that has to do with, are the founders going to be able to raise a significant amount of capital? Because some founders can, and some just don't get it for one reason or another. And that's part of the challenge. But it's also a technology challenge, because it's not always obvious immediately. So the way I would kind of approach it, one, like it with anything, I want to know, is there a big market opportunity? Two, is the technology defensible? Or do they have a real moat that if it's not built yet, will it be built over the coming year or two, so that they have something that's quite differentiated and not replicable? Is there a founder market fit? Do the founders have the relevant experience, not just from an engineering side, but do they have the wherewithal to actually build a business? And then as co-investors, which, you know, every deal we do, we're a co-investor, who else is in the round? Does the syndicate include some other investors who are both experienced, have a track record in space tech, or are they going to be good mentors, advisors, board members? We don't take a board seat, so we pretty much rely on the lead investor to serve our interests as well. So we look at the full picture. We use a scorecard that kind of gauges all these different factors, and then eventually we come to a decision, and it has to hit a certain threshold. So that's on the space tech. On the health tech, so I never did really health tech investing before I came to Alumni, but over here, as being a generalist, I've gotten very familiar very quickly with different kinds of health technology, and we're very broad. So we look at digital health, we look at healthcare software of all kinds, but we're also into therapeutics and diagnostics and medical devices. And again, this is kind of falls into that deep tech bucket where there's generally a lot of R&D needed, and it can take many years even to reach an exit. And some companies in this business go public even without having revenue yet. But generally, there's a lot of regulatory hurdles that can take years to go through. So again, it's kind of looking at the full picture of the market, the science, the team, and the what investors are coming in alongside the round that all hopefully validate a business case. But we see a lot out there. It's very tempting to invest in a lot of the therapeutics companies in particular, because they're working on life-saving drugs and all kinds of incredible things that I feel I could never do because I don't have that kind of background. So I want to support them all, but you have to be picky, and so we kind of have our method of narrowing to those that we feel are the best opportunities.
Do you always meet the founders?
We at least meet them virtually. Don't
Mhm.
always meet them face to face, although it's nice to
Mhm.
be able to do that. We kind of realize that
Yeah.
we're actually able to kind of do our job over Zoom, through COVID
Yeah.
and all that. And that makes our job more efficient too, if we don't have to necessarily travel to in-person meetings with every company, but we're always able to do Zooms whenever we need to.
Okay. Solomon, I see you have your image on. Did you want to ask a question or make a comment? Solomon. Okay. Phenomenal answer. Thank you. All right. Nathaniel likes your answer, Ron.
My pleasure. Thank you.
Okay. Solomon. Okay. So let me ask, Ron, I'm curious. What do you think that you're best at? Ron has come on, but let me just ask my question while Solomon's getting warmed up here. What do you think you're best at? What is your they talk about a sweet spot. What's the sweet spot, right? What are you really good at?
In terms of a sector, or in terms of my sort of personal skill set, or?
Your personal skill set, yeah.
Yeah, that's a great question. I thought so. It's funny. after I was a founder of TravelPerk, I moved back to Boston. My mom got sick with Alzheimer's, and I just moved back home, and
Yeah.
I took a pause in my career and said, okay, what do I want to do? And I took kind of an assessment test on what would I be good at. And the two careers that I scored like 100%, like these are the perfect careers for me, were venture capital and recruiting or executive search, headhunting, basically. Which is interesting because I think that what that was telling me is like my most marketable skill is probably that I'm very good at drawing connections and remembering who is doing what and how can I create synergies. And even if I'm not directly benefiting, if I know two people who I think ought to come together, I have this urgent need to make an introduction because I'm like, you two people really need to know each other. And I think as a venture capitalist, that helps a lot in terms of both adding value for portfolio companies, but also just generally assessing deals and knowing who to talk to and ask for a second opinion and all of that. And this is very much a network-driven business. So I think that's kind of why I now fit at Alumni Ventures and probably why I've been here longer than I have in any other previous job.
Yeah, you got to like people. You got to like to be around people.
Absolutely.
Yeah. So that's great. You have
Rebecca,
that. Yes, Solomon, you
yeah,
have a
you allow
question.
me. Yeah, until I put my headsets, you already went. So thank you,
Okay.
Rebecca. I appreciate that.
Sure.
Hi, Ron. Nice to
Hello.
meet you.
Nice to meet you.
Hi, everybody. Look, Ron, quick question. I'm working on two directions. One is social media, new social media, what we really need. And I reached out senators with open proposals because restricting current social media applications are just making them stronger because increasing market entry barriers, and we small businesses who are investing in some kind of social media startups are really struggling. You know that, you guys, we see, you don't even look when you hear social media, you have no interest. And I can understand that being a financial manager, where it comes from. But when do you think this part can change? Because it's a really demand from the society, especially when it comes to young generation, TikTok generation, and things like that. If we don't create an alternative, then what's going to happen? Nothing going to change. And my second project is an agricultural commodity spot exchange called Agrodity. It's the same situation in agricultural market. We are spending billions, tens of billions of dollars subsidizing farmers just because we have only futures exchange, CME, Chicago one. We don't have spot one to hedge it, to make price benchmarking better, etc., to unleash private investments. And I'm also ringing the bells from USDA, ending to different kind of institutions, but nobody even looks at that side. So
Okay, so let's get a response from Ron then.
yeah, Ron,
Ron?
what do you think? What's going on? Well, agriculture and social media. Thank you.
Sure,
Okay.
sure. Well, I'll start with the first question. I mean,
Yes.
if that's not a timely question, given what's happening in Congress with TikTok and all of that, you know, it's an
Yeah,
interesting question. Yeah, you're absolutely right that investors have kind of turned away from social media. I think the feeling is that it's not exactly winner take all, but it's, you know, only a few winners will reach the scale of the Facebooks and LinkedIn's and TikToks and a handful of others, and the rest will all kind of be, because critical mass is just so necessary to have a viable business model. You need mega volume to sell enough ads and to have a targeted base, and there's been some winners, but not it's not like SaaS where you can have thousands of successful out there. So that's the challenge. So you know, I think, you know, an investor would really need to see some serious virality and being able to garner users without a heavy cost to it, and see some evidence that you might be the next kind of TikTok, and those things usually come up. And there have been plenty in the past that have just been failures, and investors have lost a lot of money on the MySpaces of the world, and so it's not without reason, and there's some fear in that. But
Yeah.
you know who someone will win, and there will always be, some creative destruction in this market. If I don't think TikTok will go away in one form or another. I think it'll still be around, but
Yeah.
someone needs to fill certain gaps. They just have to be big enough.
Right. I agree with you. Yeah.
So.
And the agricultural part? What do you think?
Yeah, well, there's a lot of movement that I see in ag tech generally.
Mhm.
I see a lot on like crop monitoring and
Yeah, it is.
and all of
Yeah.
these kinds of things. What you're talking about is a little different. I don't know why it's not
It-
gaining traction specifically in your case. I mean, I think there are investors that do focus in this area. Maybe it
Do you
just
mind to share some if Rebecca allows?
I
of
can
course.
follow up with you offline about that.
Appreciate.
Yeah.
Yeah, I'll send my
Oh, that's
LinkedIn.
good.
Thank you so much. Thank you, guys.
Okay.
Appreciate it. In the chat, I'll drop.
Okay, good. Ron, I wrote the book Silicon Heartland, so I've been very much in the Heartland and the Rust Belt recently and seeing what's going on there. So I'd love to have your take on what you think the Heartland's prospects are as a tech belt.
Yes. I am bullish. I mean, I think there's a lot of reason to believe that great innovation does not need to happen in Silicon Valley or Boston or New York or a few
Yeah.
other places that it's kind of famous for. Entrepreneurial ecosystems can be built anywhere. I think if you need kind of the right balance of incentives, meaning less regulatory, but you also need intellectual capacity. So I think areas that are maybe closer to some universities, particularly where there's strong engineering and
Yeah.
STEM, can be very helpful. But smart people are everywhere, regardless of any of that. And investors, I think, need to keep their eyes open. I frequently reference this kind of tome on angel investing that was written by Jason Calacanis, who's a well-known investor, where he basically says you should only invest in Silicon Valley. And that's not only disproven by the data, it's disproven by all logic and common sense. And I don't know. I mean, he's been successful, so I'm not going to comment about anything else he does. But that comment really struck me. I've invested in many companies all across the country, all across the world that have been very successful. There are countless examples of unicorns and public companies that were not created in Silicon Valley, and the vast majority of public companies were not created in Silicon Valley. So I don't know what he's smoking exactly, but Silicon Valley is also very expensive. I mean, living in the San Francisco Bay Area is extremely
Yeah.
expensive.
Yeah.
I think COVID has proven that remote work can be a viable option, at least partially remote workforces. Every company kind of handles it a little bit differently, but companies can be adaptable. And I think there's a lot of opportunity, and I actually really look forward to seeing opportunities that might come from Kansas or Nebraska or Oklahoma. I mean, candidly,
Yeah.
I just don't see much. I mean, I'd like to think that we reach out, but I also would like to see more inbound. So I don't think it's only on investors.
Okay.
I think it's also up to entrepreneurs to kind of reach out to the investors that do tend to congregate on the coast a little bit more. But I'm seeing a lot more venture groups and angel groups as well, kind of popping up across the country, which gives me a lot of hope.
Yeah, those were a lot of good points. And I just want to make one comment too, that it seems that many of the fastest rising cities as tech economy cities are ones that have a top university and they're capital cities and they have a big corporation that's based there. So I'm thinking about Austin, Texas, Columbus, Ohio, Madison, Wisconsin. They all fit those three factors. So anyhow, there are others. It's harder for others to get going because the talent pool can be
That can
so.
definitely be a barrier, indeed. But I think about the company that I invested in Birmingham, Alabama, called Vero Skills. It's another ed tech platform
Mhm.
that has a very interesting model of bringing education and software engineering
Yeah.
to sort of underserved communities by partnering with nonprofit organizations. And this was just a dynamic founder who happened for personal reasons to end up in Birmingham and has been able to build a really impressive company there.
Mhm.
So it can be done anywhere. If you're resourceful and have the wherewithal, there's
Right,
really no reason why it should be a barrier,
right.
particularly if you're able to access talent that's remote in some cases.
Sure. Okay, so Bernard, I see you have you're ready to go.
Hi, Rebecca. Hi, everyone.
Hi.
Happy birthday. First of all, thank you for the book was great and brought me the VC mindset that and the core premise of using a capital for social good and and we normally see it as something that can only be used for the monetary value of things and but it also your book also argues that VCs have the responsibility of backing founders that solve and uh, major challenges and not just focus on financial rewards. And how do you see this purpose-driven mindset throughout the Alumni Ventures organization or is it just a personal thesis?
Yeah, I mean, it's certainly my personal thesis. I wrote the book kind of from my own perspective, but it's a great question. I mean, I do see the two as compatible and have seen countless investments at Alumni that have not just been from me, but from colleagues as well that do have a social purpose. I think impact is in the eye of the beholder, which is why it's very difficult to determine what actually is an impact investment. What may be to one is maybe less of a priority to someone else. But I would argue that everybody has something that they care about, more than money, like maybe the education of their children or longevity and their ability to live a long, healthy lifespan. There's something that I think we all kind of care about. And there are problems that need to be solved in all of these areas, and there are scalable solutions and very often technology that I think can bridge the gap. So in terms of Alumni Ventures, we don't have a specific mandate. We do occasionally offer an impact fund, which will piece together companies that have a very clear, stark impact focus. But it's not specifically a mandate. I mean, we will invest in companies that I wouldn't say we'd invest in, like, tobacco or oil drilling or other things that might be more controversial. But a traditional enterprise SaaS deal may or may not be considered impact. And we do a lot of that. But there is a significant number of companies that will have impact across healthcare, across education, across fintech and many other areas. And I think it would be hard pressed to find any Alumni Ventures fund that didn't have at least some of that represented in the portfolio. And I think I feel that because of the culture of our organization. We're a very collaborative culture. We're a very low ego culture. Because we're not lead investors and we're not board members, it doesn't really leave a lot of room for ego. We're just trying to do the best job we can to fight our way into the best opportunities that we can find. And I think most of my colleagues kind of share my interest, and certainly our founder and our leadership team have given me great support to go and invest in as many impact-driven companies as I can, and I think they do the same sort of across the organization.
Yeah. Do
Do you
you
see
have a
the
limit on the number of individual investors who can come in?
Within specific funds, there are limits that are set by the SEC. It kind of depends on the fund based on kind of accredited versus qualified investors. Generally, we don't usually max out on those, though, because we do annual vintages. So there's plenty of opportunities to invest with us.
I see. Okay.
I think Bernard had a quick follow-up.
Yeah. I have one more question. Do you see the future of VC heading towards the LPs requesting more ESG metrics and is that something you think also venture capitalists are going to be willing to do?
Yeah, that's a very important question. And I do touch upon that in the book, that there are LPs, particularly in some of the larger institutional funds that are looking out for ESG metrics and, measuring impact and, also any negative effects of what companies might be doing. So yeah, I mean, there is research on that. A lot of it coming from the Global Impact Investor Network, GIIN, which I'd encourage anyone to look at if they're interested in the topic. And so there is absolutely a movement among many organizations, including up to some of the largest sovereign wealth funds in the world that are putting on stricter demands of their fund managers.
Okay. Darshan has his hand up. Darshan, do you want to join in?
Yes. Can you hear me?
Yes.
I just had a little schedule last minute thing, so I had to come out, but I'm very nice. Thank you. Ron, it's nice to see you and have a chance to talk to you here. So I have a quick question about if you impact investing fund 1.0, like launching your first VC fund today. How would you approach LP?
Oh, very, very interesting question. So I think, if I was raising a traditional venture fund, but with a thesis around impact, call it the same thesis that I have for my book, I think there's enough of those kind of investors, those LPs that Bernard was asking about, that are interested in impact, that you can kind of start the conversation there. And this is very often family offices, but it can also be endowments and pension funds and others, and find investors that you're aligned with, because I don't want to have to start a conversation by convincing someone that impact is important. If we need to have that conversation, it's going to probably go on forever. I think there's something very philosophical about that, and I've tried to kind of say my piece on that through the book and through various interviews I've done on why I think they're perfectly compatible. But I think I would definitely position something along the lines of what I've described about solving for impact. I think there's solving for inequality problems, because I think it's the largest societal issue that's not really being directly addressed. Most of the impact funds out there either tend to have a focus on climate change, which is very important, but I think it's better covered than what I do, not covered enough, but better than some of the areas I address, and others focus on underrepresented founders, women, people of color, which I fully agree with and is very much in line with what I do. But I specifically focus on the thesis of the business model. What problem are they trying to address? Many of them, actually quite a disproportionate number, have a female or person of color as a founder. But I would focus on this thesis, I guess, because I don't think there are really many others out there who are doing that. And I think it's a big enough market. I think it's well diversified. And I think there's really ample opportunities just to kind of focus on the kinds of companies that I write about in the book.
Okay, that's good. Would you please mute in the background? I would appreciate that. Please mute in the background. Okay, so please
I think
mute.
that might be Kyle.
Kyle, please mute. Yes. Okay, so we have another speaker, I think. So anyhow, I think what we need to do is see if, would you please mute, please mute. Okay. Okay.
I think the host can mute.
I think, yeah, as a host, you can mute, Rebecca.
I did. I muted. Okay. All right. Sorry about that, folks. So this is live. These are human beings on this. We're not all chat GPT people, robots. We actually have lives. Okay. So what do you think about generative AI, Ron?
Well, I should ask ChatGPT to tell me what I think about
Uh-oh.
I don't need to think anymore, right? It's going to solve all of our problems and do all of our work for us.
No, I was interviewing somebody yesterday, and they said they were using some new system to digest all the intake of news every day, and that the AI agent does a tremendous job of condensing and digesting all of it. And I thought, well, I kind of like to see more, a little bit more random, but he's a consultant, so he needs to, get it all together so he can go out and speak to his clients this way and sound knowledgeable. Hal Kelman, I'm going to pick on you. If you have anything to add as we're going to close. Hal, you're always good on some comments. So we're going to be closing the show any moment now. Hal Kelman. Okay, I guess he's not going to say anything. He's
I don't
gone
know if
into
that's a good sign or a bad sign.
I don't know. He's gone into
He agrees
robot
with
mode.
everything I said, or he can't stand any of it.
I'm sure he enjoyed it very much. Hal's an individual investor himself. All right. Anyone else have a last question or comment? Anyone else have a last question or comment? Okay, so I'm going to share screen again. Oh, Nathaniel has a comment or question. Okay,
Yes, I
real
do.
quick. We have a few minutes left.
Okay, sorry about that. Just one last question, Ron. I know you mentioned the scorecard. I think it's what like the deal dynamics, the lead investor, the company, and the team. Uh, a lot of that is quite qualitative. I guess what is the most difficult aspect or criteria that's hard to really quantify or really make a decision on?
Yeah, that's another very insightful question, because it is a challenge. And I would say really understanding the founder fit, because ultimately it's up to the founder to actually execute and build a business. Many founders are really good at pitching their ideas, and I walk away convinced like, oh, I wish I could invest in this and that, and because they do a great job of selling their ideas. Not everyone knows how to execute a business. There are also people with really excellent technical skills, a PhD and this and that, and you're like, wow, amazing resume. But how are you going to actually build a real company for scale and stay with it through all the tough times? I mean, being an entrepreneur is one of the most difficult jobs in the world. Having done it only for a brief period, I realize in many ways that was probably the most stressful year and change of my life. Because everyone's depending on you, your employees, your customers, your suppliers, your co-founders, your investors, board members, everything.
Yeah.
It's a lot of constituents to manage. So I would say really figuring out the people, and if the co-founders are the right fit and they're going to gel well with you, that's probably the biggest challenge.
Okay, those excellent answers. Really some great questions as well. Thank you everyone for joining us today. Really appreciate it. And
Thank
Ron,
you, Rebecca.
yeah, okay. So we still have some lessons to learn about how to do Zoom, but we're moving along, all of us. So look, our next couple of shows are coming up very soon, and I'd like to just share a few details about them. We were just in Austin, and we did a great event with South by Southwest, and I spoke there about the Silicon Heartland theme. And then we did a barbecue out at a ranch in the Austin Hills. And I learned that the Austin Hills, some people don't really know where the Austin Hills is, but they learned quickly to get to our event. Now, I should say that we do this show regularly. We do the Ask a VC show regularly. And we rotated around. So it's very global. We've had people on from Israel, from Beijing, from Hong Kong, from India, New York, Silicon Valley, Texas, where else? Oh my goodness, everywhere. And it was really fun during COVID because we got to speak to people who were in China, and they were in lockdown. They were in their hotels. So it was a direct thing to see what was going on at that time. And these were very well-known venture capitalists who have been on the show. We've had everyone from Steve Case to Tim Draper to Gary Rochelle to DCM. If you go down Sand Hill Road, we've had all of those firms. We've had many from China, many from India. I welcome your suggestions for our upcoming shows. We have an opening for April, and we have an opening for May, and we have an opening for June. We're probably going to take a break in July and August, but then we'll be back again in September, and we're doing the show at least once a month. So I do appreciate you listening in. And Ron, you were a terrific panelist, guest. And do you have any final comments?
No, thank you for the opportunity. I appreciate the chance to get to talk about my book and my work. And you know, if anyone is interested in following up with me, you can find me on LinkedIn, and I have a website for the book. It's higherpurposevc.com. And if you'd like to know more about Alumni Ventures, it's av.vc. Very simple.
Okay, that's very good. That's very good. So everyone who's Zoomed on today, you'll see a replay of all of us on Silicon Global Online on our YouTube channel. And then I will end our show for today. So actually, you could check out all of our videos of our Ask a VC show on Silicon Global Online on YouTube. It's our own channel. And silicondragonventures.com is my website. So please tune in. I really enjoy being part of the community. And thank you again. We'll see you soon.
Thank you, Rebecca. I appreciate that. Ron, thank you. Have a good one, guys. Appreciate that.
All right.
Thank you so
Excellent.
much.
Thank you. Thank you
All
all.
right.
Yeah.
All right.
Bye.
Take
Bye-bye.
care. All right. Bye-bye.
Bye-bye. guys.
Bye-bye.
Bye-bye.